Welcome to the channel Get Rich. So if you are new to this channel, please subscribe this channel and then please press the bell icon. So let's get started. So today we are going to look into a company which operates in capital markets. So before going into the company, let's first have a look at the capital market industry. So if you are looking at the capital market industry, so first let's have a look at demand account trend. So if you look at the total accounts, it's going at a CAGR of 50%. It's growing pretty good. And if you're looking at the newly opened accounts in millions, so in financial year 20 it was 5 million. In financial 2021 it was 14.3 million, and half year financial 2022 it was already 15.1 million. So more accounts are opened. So it's growing at a very high rate, so it has a very good opportunity in the coming year. So if you look into the demand account penetration compared with different countries, so US has about 32 percentage of demand account penetration, and China has 13.7%, and India has only 5.1% demand account penetration. So it still has a huge opportunity to grow in these particular markets. And then if you have a look at the mutual fund penetration, so US has about 140%, and then Brazil 84%, and then global average is 63%, Japan 49%, China 21%, and India is sitting at around 16%. So even in this mutual fund space, there are a lot of opportunities, a lot of growth ahead in India. And if you look at the mutual fund AUM as a percentage of GDP, it's also the same. So India is under penetrated. And if you also look at the global wealth, so total global wealth is about $418 trillion. Among that, 30% comes in US and 18% in China and only 3% in India. So we still have a lot of room to catch up with other countries. So we can still have a huge growth in the financial markets in India. And then if you look at the housing finance or loan outstanding trends, it's also still have a mortgage compared to GDP in India is around only 10%, compared with China it's 30% and USA 60%. So even in mortgage space, it has a very good growth ahead, because this company is also having operating in housing finance. So that's why, so we are looking into all these different types. So all these different segments have a huge growth ahead. And then if you have a look at the different brokers in capital markets and what are their market share in India. So the first one, if you have a look at the discount broker, so which is Zerodha, which we have about 19.2% market share. And then the second one is Upstock, so we have 11.3%. The third one is Angel Broking, 8.1%. HDFC Securities Limited, which is 5.6%. And then we have Motilal Oswal, which is 3.1%. So today we are going to look into a company which is Motilal Oswal Financial Services Limited. So let's have a look at that. So they have 3.1% market share in the broking business. So let's have a look at their business segments. What are their key business they are doing? Motilal Oswal Financial Services. So the first one is capital markets. So capital markets involves broking, investment banking, and also distribution. So these are their main key segments inside capital markets. And they have asset management as a second one. Inside asset management, they have mutual funds. They have different PMS. They have different wealth management. They have several different options in the asset management. So it's mainly wealth management or asset management or money management. This comes under this asset management category. And the third one, which they have housing finance. So you all know that. So housing finance, they finance new homes. So that's the third one. And then the fourth one is fund based investments. So that's also a key one. So they have 4 different segments in Motilal Oswal Financial Services. So let's have a look at each of them and how they have growing at the past years or how they have potential in the future years. What are they? And let's have a look at that. So before having a look at that one, so let's have a look at their market price. So currently Motilal Oswal Services Limited, they are sitting at a price of about 940 rupees. So it had an all-time high of about even 1600 rupees, but currently it's 940 rupees. And if you look at the market capitalization, it's somewhere about 13,500 crores. It's a market capitalization of this particular company. So let's have a look at the different business segments. So what are the different business segments which business segments provides how many percentage of revenue and profit after tax. So first let's have a look at the revenue mix. So in financial year 17, so capital market provides 38%, which is now increased to almost 48% of the revenue is coming from capital market. And then if you look at the second biggest, which is asset and wealth management, so it was around 26% in financial year 2017, and currently it accounts about 23%. And the third one is housing finance. It reduced from 30% to 11%. And then they have fund based, which increased from 6% to 18% in revenue side. If you have a look at the profit after tax, which segments is providing how much profit after tax. So if you have a look at that, the capital market provides about 26% in H1 financial year 2022, and then asset and wealth management comes about the second, which is 25%, and the third one is housing finance 4%, and then the fourth one is fund based, which is 46%. So they have a wide variety of if you look at the profit after tax, it keeps changing, so we don't know. It all depends on the market performance and the financial performance of the country. So it depends. So they have different variations of profit after tax, which segment provides how much. So they have a wide variations in their profit also, because one year they can provide 600 crores, and if market does very bad, then it comes down to 100 200 crores profit after tax. And then if the market does well, they can again provide very much better profits during the good market. So that's also something we have to take into account. So it's not a cyclical, but its performance is mainly depends on the market performance. So then let's have a look at the return on equity. So if you have the return on equity for the different segments, so the capital markets, which provides 130%, and then asset and wealth management 309%, these are asset light businesses, and then housing finance 6%, fund based investments 25%. And if you look at the net worth employed, how much net worth is employed to which segments, 68% is employed in fund based investments, 20% in housing finance, 3% in asset and wealth management, and 8% in capital markets. Then the first one, which is the capital market segment. So let's have a look at their capital market segment. So in this, they mainly have a retail broking business model. So let's have a look at that. So they have branches of about 93 branches. They have 3,400 employees, and they have 720 advisors. They have about 5.7 lakh clients in this segment. And then they also have franchise model. So they have the largest franchise network in 500 plus cities, and they have 6,200 active partners and 600 employees, 420 advisors, and 12.5 lakh plus clients in this segment. And then they also have high net worth individual, focusing on the high net worth individual wealth management. So they have 100 plus advisors and 6,500 high net worth individuals in this segment. And then they have a digital side, and then they recently they acquired a lot of their clients online. So they have 700 plus employees, and then 470 plus advisors in this category, and then 5.5 lakh plus clients. So they are doing a lot of client acquisition through digital lately. If you look at their business enablers, so first one is the distribution. So they have mutual fund, they have PMS, they have alternative funds, PE funds or private equity, real estate, and so on. So they would be different distribution business on the first side. And then they have product based. For example, they do IPO financing, working capital financing, margin funding, commodity and currency. So these they do in the product side. And then they also do a lot of research. So they cover almost 275 stocks. So they provide research reports for different companies. So personally, I like their research report when compared to other brokerage houses. They do very good research reports. I like to read their research reports because they're detailed, and it's well written. So that's they are doing a very good job in that side. So and then if you look at the technology side, they have separate apps for traders and investors. They have 4.1 million app downloads till date. So these are their capital market segment business. So if you look at their investment banking, so they recently completed 3 IPOs. One is Aditya Birla Sun Life AMC, Devyani International, and GR Infra Projects Limited. So these are the 3 different IPOs they completed recently. If you look at their revenue and profit after tax from this particular segment, profit after tax, which is almost 8x growth in profit after tax from financial year 2016 to financial year 2021. So they are growing pretty good in capital market segment. And if you also look at their acquisition trend of franchise business partners, they increased from 3,700 to almost 6,200 from quarter 2 financial 2020 to quarter 2 financial 2022 in 2 years. So that's really good. They are increasing their franchise and business partners, so that's good. And then if you look at their active clients, they are increasing their active clients at the CAGR of 28%, and they have very strong growth in retail client base, which is growing at a CAGR of 25%. And if you look at their traction in client acquisition, recently they are acquiring a lot of their clients through online channel. Almost 51% of their client acquisition is done through online. And also if you look at their market share in the incremental demand account, so they have about 2.8% in quarter 2 financial 2022. So that's their market share. And then the second segment, which is asset management segment. So in the asset management segment, so they are doing SIP addition, which increased by 62%. And then yeah, they have a lot of market share also here. So the market share of, not a lot of market share, but the market share of 1.5% in mutual fund equity asset under management. So also if you look at the SIP flows, that's pretty good. SIP flow, that's also slowly increasing. And then if you look at the market share, as I said, it's about 1.8% currently. And then if you have a look at their percentage difference between the mutual fund and alternatives, they have about 62% in mutual fund and 38% in alternatives in the AUM. And then if you look at the their fee structure, so 76% of their fee is fixed fee, and then 24% is performance linked. So almost 76% is fixed fee, so it doesn't have to be changing, depends on the market performance. So even market do good bad, they are going to get a fixed fee. So that's good, yeah, for the company, but not for the investors. And then so they have 24 percentage, so that's performance linked. So they have a base fee and also the performance fee. I get depends on the performance, they will get more or less. So that's the performance linked, which is 24%. And then if you look at their SIP, live SIP, which is currently 1,40,000, so that's also pretty good. And then if you look at their asset under management growth for the AMC, which they are growing at around 21% CAGR. And if you look at the private equity real estate AUM, which is growing at about 21% CAGR. And then if you look at their wealth AUM or health or ultra high net worth individuals wealth AUM, which is growing at around 27%. And then their distribution AUM growth, which is growing at about 27%. So they are growing more than 20% in all of the segments. And if you look at the breakup between the mutual fund and the PMS, so they are about out of 496 billion rupees, 307 is in mutual fund, and then 157 in PMS, and then 29 in alternative investment funds. And if you look at their distribution AUM mix, 35% is in mutual funds, 30% from PMS, 11% from PE or private equity and real estate, and then they have alternative investment funds 5%, and then the others 19%. So let's have a look at their housing finance limited. So in this case, yeah, they have a very good rating in this case. So let's have a look at their different key metrics. For example, so if you look at the loan to value ratio, so they have about 58% in this quarter. And if you look at their customer mix, almost 55% are salaried and 45% are self-employed, and they are giving loans to about 45% new purchase, 27% self-construction, and then 13% others, and so on. And then if you look at their different states they are active in, so they are mainly active in Maharashtra, Gujarat, and Madhya Pradesh. Now they are expanding into Tamil Nadu, Chhattisgarh, Karnataka, Rajasthan, Delhi, and Haryana. And also if you look at their NPA, gross NPA and net NPA, non-performing assets, so it was around 1.6% in quarter 2 financial 2021, and it increased to almost 4.7% in quarter 1 financial 2022, and now it's again reduced to 2.2%, and net NPA is 1.4% in this particular quarter. So their NPA is decreasing, so that's good. And then if you look at their last segment, which is fund based investment segment, so they are growing their quoted investments at 19% CAGR, and then their private equity and real estate investments as 33% CAGR. So that's good. And if you look at their growth in investments over the years, so they are doing about 29% CAGR from financial 2017 to financial 2021. So that's a very good one. So they're growing at about 29% CAGR in this segment. So that's also a pretty good. And then if you look at their investment breakup, so they have about 59% in equity shares, 26% in private equity and real estate, 15% in mutual funds and alternatives. And then if you look at their financial statements, how they are increasing their total revenue and profit after tax. So if you have a look at their total revenue, so they are increasing their revenue of about 19% CAGR. And then if you look at their profitability, so they are growing at around 36% CAGR in profit after tax. So they are doing a pretty good job in increasing revenue and profits. And then let's have a look at their annual statement or financial statements of profit and loss statement. So if you look at their sales, they increased from 645 crores in 2010 to almost 4,300 crores estimated in 2022. And their net profit is grown from 170 crores in 2010 to almost 1,250 crores in 2021, and they are expected to about 1,400 1,500 crores in 2022. So that's a very good growth. But then if you look at the individual years, for example, so in 2017 they did about 360 crores, 2018 they did about 622 crores, and again 2019 it reduced to 294, 2020 it reduced to 183, and then 2021 it increased to 1200. So they do not have a very constant growth of net profit because it really depends on the market performance. If due to corona crash in March 2020 or financial 2020, their profits reduced to almost 183 crores, and then March 2021 the financial markets did good, they are doing about 1250 crores. That's also something we have to keep in mind. But they are doing good, so they are always bouncing back after the relatively bad markets. They are bouncing back stock, so that's a very good thing. So they grew their sales about 20% CAGR over the 10 years, and their profit 26% CAGR over the last 10 years, and their stock price also doing pretty good, and they also have a very good return on equity. If you look at their return on equity, so they have 22% in financial 2017, 26% financial 2018, and in the recent year it is 37%. They are also doing pretty good dividend payout. So their dividend payout ratio is 22% in financial year 2017, 26% in financial 2018, and then 39%, 15%, 38%, 28%. So they are having a pretty good dividend payout ratio. And if you have a look at their balance sheet, they are increasing from their reserves from 932 crores in financial year 2010 to almost 5,100 crores in financial 2022. So they are increasing their reserves. That's also a pretty good thing. Their investments also have grown from 50 crores to almost 4,150 crores in financial 2022. So that's also a pretty nice growth. And then if you have a look at their profit after tax growth or the analyst expectation, so their profit after tax was expected to be 1,300 crores in financial 2022 and 1,400 crores in financial 2023. But of course it depends on the market performance. But it is expected, they are expected to do about 1,400 crores in financial 2023. And then if you look at their shareholding pattern, so promoter holds a large of about 70%, and then the promoter holding is steady over the years. And also if you look at the mutual fund holding, so they reduced in June and September 2021, and then in December 2021 they are again increasing. So but that's not a lot, because from 5% to 2%, and then currently it again increased to 3%. So that's 2% decreased when we compare to the June 2020. But mutual funds are increasing lately, so that's a good thing. And also FIA holding, so they are also slightly increasing, not a lot. And if you look at the mutual fund holding, what mutual funds are doing, they sold big in July and August, and then in September they are buying, in October they are buying, November they are buying, and December they are buying. So mutual funds are buying in the past 4 months. If you have a look at the different mutual funds which are holding this particular company, so Parak FlexiCap regular growth, they have a very nice holding. They are increasing their shares every month. For example, in October 2022 they increased 680%, in November 31%, in December 29%. So they are buying every single month. That's nice. They are a very good value investment fund. The Parak FlexiCap, it's a mutual fund. They have a very good value investment strategy, so they are buying. So that's a very good thing in the company. And then the ICICI Prudential, they reduced their holding. They reduced about almost 58% of their shareholding. And then the second biggest one is ICICI Prudential Small Cap Fund Growth. They did not increase or decrease. And then if you also look at the Parak Parak Tax Saver Fund, they also increased their holding in this particular company, in this particular fund. And then we have Franklin Asian Equity Fund Growth, and then we have Nippon India ETF Nifty Mid Cap 150. So they are also buying. So that's pretty good. Most of the mutual funds are buying this particular share, so and increase their share in the previous months. So that's good thing. And if you have a look at the valuation of this particular company, so I am expecting this company to do revenue of about 4,300 crores in 2022 and 4,600 crores in 2023, with a growth of 19% and 7% in 2022 and 2023. And I'm expecting the net income of 1,400 crores in 2022 and 1,580 crores in 2023. But it really depends on the market performance. If market do really bad or something bad happens, so it's not guaranteed, they are not guaranteed to do this particular profits. So that's really depend on the market performance. If market tanks very hard and that there's something happen in the financial markets, so their profits are going to reduce. So that's a risk we need to keep in mind in this particular company. But in a good scenario, they are doing good. Even after the bad market, they are bouncing back. So that's a very good thing in this company. And I'm expecting the growth of 12% and 13% in 2022 and 2023. And if you look at the price target with the current valuation, which is P of 9, so 1 year price target would be 967 rupees, but it's 4%, but the P is pretty low, I feel. So I'm estimating with the price target with the P of 20, because that's the average P for this company. But if you look at the different analysts, they are some analysts are even putting sell call of this particular company, and they are giving a price target of 800 rupees, 900 rupees. That's the price target. Personally, I disagree with that. So they have a very good long term potential in this particular company. So the price target is not 1 year price target, but yeah, I feel it's 1 to 2 year price target would be if you calculate with the P of 20, it's 2,150 rupees with a price cumulative growth of 132%. But even if this particular price target, if it did not play out in 1 to 2 years, then it will play out in next year or the next year. But because I feel the long term story is intact in this particular company. If for example next year, if something bad happens in the financial market, and if the financial market collapse or something, and then if you have a huge crash, of course this company is going to hit badly, and then the net revenue is going to drop, and then share price can drop, but it will bounce back in the coming years, because we always markets will bounce back. So I feel this stock has a very good potential. So they have very good promoters behind this company, and they are growing pretty nicely. So they have very good growth ahead in the particular industry they are operating in. So I personally feel this stock is a good buy, or in the fair valuation, or little bit undervalued valuation, I would feel. So personally, my personal opinion is we can buy this stock for a very nice price growth. For my personal opinion is 1 to 2 years. This can even provide more than 100% return if everything goes well. So that's of course my personal opinion. You have to do your due diligence. This is not a financial advice. So if you like this video, like, share and comment. So if you want me to analyze any other company, please put them in the comment. And if you did not subscribe this channel yet, please subscribe and press the bell icon. So that's all for today, and thank you for watching. And if you want to subscribe for the free newsletter, please subscribe for the free newsletter in the description below. So thank you for watching, and have a nice day. Bye bye.